Hello everyone, welcome today. Happy Dhanteras and Happy Diwali to all of you. So let's start the session. Sorry for a bit of delay. There was some technical glitch. Uh, let's start the today's session. So today what we are going to do? Today we are going to cover chapter 4 in detail, part 3.1. Okay, part 3 that we discussed in last lecture about risk assessment, internal control, and response to the assessed risk. Remember something from the last lecture? So we are going to cover today the rest of the portion. Okay. Now, uh, coming to the particular, that topic, I just for the revision purpose. Remember, you like we had a discussion in the last lecture wherein we were discussing about uh, the risk assessment part, high, medium, low. We prepared an Excel table, and we prepared a detailed summary kind of wherein we were discussing about the things about how we identify the risk, how we identify and rate a risk, what are the internal controls, and how we map a control in front of the risk, and even a step ahead that what are the overall risk assessment for the control. Okay, now we'll continue that topic and we'll proceed further with the part 3. Okay, so when I talk about risk assessment and when I talk about evaluation of the controls, so for that I have SA 315 who guides me how to perform the risk assessment, and whatever we have done, SA 315 guides me on the similar line that how you are required to assess the risk of material mistake. So along with this, we will also understand the requirements of SA 315. And then we will see, okay, how the SA 315, sorry, really sorry. Okay, so how SA 315 and what we have done till now are in similar, are on same lines. So SA 315 is nothing but understanding the, identifying and assessing the risk of material misstatement through understanding the entity and its environment. So identifying and assessing the risk of material misstatement through understanding the entity and its environment. What we have done basically till now is the objective that is provided by this particular standard. So as an auditor, we are required to identify and assess the risk of material misstatement, whether due to fraud or error, at the financial statement level and at assertion level through understanding the entity. And we did that in the last lecture. Remember, we were trying to do with an example, we were trying to understand the risk of material misstatement at the assertion level. Okay, so that is something the requirement of the standard over here is. And that is already, as an auditor, we did in the last lecture as an example. Okay. Now, if you see, understanding the entity, okay, which includes understanding your internal controls also. Understanding of the entity includes understanding of the internal controls, and we also remember we're mapping the internal controls in front of uh, the risk that we identified. So kind of what we were doing is we were understanding the entity, we were understanding the risk, and then we were mapping the control in front of that. And then we were rating the control. Okay. So on similar lines, we were doing what, as of now, the objective of the standard is. Basically, the objective here is uh, auditor. The auditor is to identify, assess the risk of material misstatement, whether due to fraud or error. Okay, at the financial statement and assertion level. So we did at the assertion level through understanding the entity and its environment, including the entity's internal control. Then provide a basis for designing and implementing response to the assessed risk of material misstatement. So that is something we did in the last lecture. That okay, what we did is we identified the risk. We identified what is the risk at the assertion level. Okay, understanding and identifying the risk at the assertion level. This one, identify and assess the risk of material misstatement, assertion levels, and financial statement levels through understanding the entity, and then include the entity's internal control that we did. Okay, we included the entity's internal control. Now what we need to understand is designing and implementing response to the assessed risk of the material misstatement. That is something again part of SA 330, but that is something where you decide what to do once you identify a risk, how to proceed once you identify that risk. Okay, so that is something, the third part I was talking about. We'll see one by one the requirement of SA, and we'll see what we have done also. So when I talk about this particular area, that identify and assess the risk of material misstatement, how we need to do that. As per the standard, we need to identify and assess the risk of material misstatement through risk assessment procedures. Okay. How to perform or identify and assess, identify and assess the risk of material misstatement due to fraud and error. And for that, the standard is saying perform risk assessment procedures. Okay. So in order to identify and assess the risk of material misstatement, you perform the risk assessment procedures. Now, as per the standard, the risk assessment procedure will provide a basis for identification and assessment of risk of material misstatement at the financial statement level and the assertion level. Okay. Now, risk assessment in itself is not the sufficient and appropriate audit evidence for the audit opinion. Means whatever we have prepared in the Excel, it's not the sufficient and required appropriate audit evidence. We need to perform testing whatever we decide in that Excel or plan. So risk assessment is something where you identify the risk. It's not sufficient to give you the comfort for the audit opinion. Now, how to perform risk assessment? That is one important question. So let's say, for example, when we were understanding the types of risk, okay, what is the process? Let's say, for example, with respect to unauthorized processing of invoice, how we will come to know that is a risk? Like, okay, I started from a point where I said, okay, no, this is a risk which is available. But how you come to know about that risk? How you come to know that the company processes non-PO invoices or PO invoices? There will be a lot of processes within the company that will be different than the other companies. How will you come to know that there is a risk? Anyone? How will you come to know? What, like, we started our example where I took that, okay, there is a risk. Okay, the risk is this one, like, for example, that unauthorized processing of PO invoices. I took that risk, starting point. But from where we got that starting point is something we need to understand. Okay, so now let's say for example, in this particular sheet, remember, this was the starting point, this description, from where we got this point, from where we got this particular risk, or you can say from where I got this process description. What is the basis for having that? Someone, if you can answer this, from where I can get this information, from where, like a person enters PO invoices into the ERP, from where I will identify this? Come on guys, from where I will identify this? Anyone? If I have to identify what is the process, how will I identify which processes are there? So how I will identify the items of column D and E? What will be the trigger point for me? I cannot make things for my own. Okay, let's say a person enters PO invoice into the ERP. How can I ensure that this process is there? What I have to do for that? Okay, Charu, very good. What else? How you can validate that, okay, there is a process in the company? How you can validate that there is a process in the company? Okay, Geeta, very good. Shailesh, good. Geeta, good. Tanisha, very good. So, but how you will identify which internal control system is there, how their segregation of duties are there, which ERP software they are using, okay, what is the hierarchy of the processes? How will you get information about that? Good, you do, Nalu. Very good. Absolutely correct, Jobin. Very good. Good, Tanisha. Yes, absolutely correct. Good, Charu. Yes. So, SOP, scrutiny of the process, walkthrough of the entity's process, understanding the entity, conducting interviews. So, when I say, risk assessment procedure we need to perform, in that we need to perform, we need to inquire the management. Okay, what is going on? Which is the process? Okay, how do you function? So, inquiries of management is something will be the starting point for us. Okay, and appropriate individuals within the company. or or within the internal audit function. Okay, so if we inquire with them, if we inquire with them, they might provide us the detail that we require. Second, we can perform analytical procedures to understand the entity. Third is observation and inspection. So by this way, we can identify, we can perform the risk assessment procedures. Means we can identify and assess the risk. Okay. Plus, I will consider additional information that I have obtained during the time of ANC checks, acceptance and continuance check. Remember when we were discussing about agreeing the terms and we were talking about, accepting the client at that particular point in time, even at the time of quality control, we were talking about accepting and continuance of the clients. We gather the information, whether that information, if what if that information can help us. So understanding and and considering other information obtained from client acceptance, will be client acceptance and continuance process of auditor. Okay. So if there is a process within the auditor's firm with respect to client's acceptance and continuance, we can get that information from there. Plus, there will be some other information which is, engagement partner might be having who might have performed similar engagement in past. Okay. Say in this example, with respect to this Excel, okay, I have performed some engagement in past, so that's why I can use that information and can present in front of you. Means I have some of my past knowledge. Similar on a similar lines, if the engagement partner has performed other engagement for the entity or he has performed similar engagements, then the knowledge or information from that engagement. So knowledge slash information from similar engagement or other engagement with same client. Already you are performing some certification related engagement and you have gathered some information for that also. You can use that information. Okay. Now this is something, the basic of risk assessment procedure. How to perform risk assessment procedure. Now, one such part of the risk assessment procedure is to understand the entity and its environment. So, when I say understanding the entity and its environment, what do I mean by understanding the entity? Now, in risk assessment procedure, as I said, we will do inquiries, analytical procedures to understand the entity. To understand the entity, its environment, and its internal controls. So now, if I have to ask you, like, okay, I'm doing this to understand the entity and its environment, but what includes in the entity and its environment? So let's say, for example, what I need to understand for the entity and its environment. Means, okay, I understood I can do inquiries. I can, go to and ask, different people in the organization. I can perform analytical procedures. I can, also observe and inspect documents. I can use other information. But like, all that thing which is which information is there, what I need to understand from that information. I told you that we need to understand the entity and its environment, but what within the entity and environment, what I need to understand. Understanding of what? My question is understanding of what? Understanding of what I need to gather. Understanding of what items kind of I as an auditor I need to get. Come on, guys, you tell me. Understanding of what I can perform interview that is there. I can perform, analytical procedures for risk assessment to understand the entity. But what I need to understand, like I should know, na? Let's say, for example, you are going for interview, but you should know that what you need to ask. Otherwise, how the other person can provide you that information. Okay. So what you need to ask is something you need to understand. And that is then will be, the information that you will get. So you give me an example of understanding of what items, if I want to go and perform an interview, analytical procedures, observation, inspection. So what I need to understand. Very good, Yukta. Good, Salesh. Very good. Good job in. Come on, guys. What I need to understand. Understanding of what items I need to gather. Come on, guys. Good, Yedukundalu. Very good. Yes, absolutely right. So, nature of entity, I need to understand relevant industry. So I'll also write over here. Relevant industry. Okay. Then regulatory perspective of that industry. Other external factors which may impact the financial reporting framework. Other other external factors that impact financial reporting framework. One important point I want to highlight here is uh, when I use this term financial reporting framework or alternatively we also say this applicable financial reporting framework. So we all know that this is something we are talking about how the financial statement will be prepared, kind of in the IFRS Schedule 3 and all those requirements which are we are talking about. Okay, but in exam, okay, a lot of people, a lot of students write it like applicability of the Ind AS, AS, and they try to convert in a generic way. Okay, so do not write in a generic way. Try to write for the specific keywords. Now, this is again a specific keyword I would say that is required to be kept in this way. So I'll highlight for you guys. So these are certain keywords which I will suggest to keep it in this way only. Like, do not try to alter these keywords. Applicable financial reporting framework. Okay. Now, then what I need to understand with respect to the entities, it's the nature of the entity, kind of, you can say what form of entity it is. Company, it's a limited company, Section 8 company, partnership firm, registered, unregistered, what form it is. Okay, nature of entity. Okay, then including its operations, including its operations, then ownership, governance, structure. Okay, then types of investment that entity is making or plan to make. Okay, then how entity is financed. Sometimes helps me to understand whether it's a debt driven entity or it's a uh, listed entity where the public is interested. So how the entity is financed. This helps me to understand the classes of transaction, account balances, disclosures that are required in the financial statement. So based on this, I can identify the classes of transaction with respect to where the risk is. Then I can identify transactions, classes of transaction which requires special attention, and I can identify additional reporting requirements in identifying the classes of transactions, account balances, and disclosures expected in financial statements. So this is something I can understand from here, from based on this nature of entity, including its operation. Third point that I need to understand is entity selection and application of accounting policies. Very important part. Entities selection and application of accounting policies. Now, why? Because at times, different entities will record their revenue in a different way, will perform, a calculation of estimates, depreciation in a different way. So I need to understand the entity's selection and application of accounting policy, FIFO, weighted average method for the percentage of completion method for recording the revenue. Do you think is appropriate when the company is, wholesaler of goods? Sorry. What do you think, guys? Whether the percentage of completion method is appropriate when the company is dealing into wholesaling of goods. As an example, what do you think? That is that appropriate? Yes, no. Anyone? Correct. Very good, Tanisha. Very good, Yerukundalu. Very good, Geeta. No, it is not because POCM is something is used in the constructions or heavy projects. It's not used and not suitable for trading of goods. Okay. So in that way, the selection, whether the accounting policies which are being selected by the entity are appropriate or not. Then what I need to understand further is how uh, entity measures and reviews the financial performance. Any example of that? How it can be different? How it can be different from entity to entity? Like how entity measures and reviews financial performance. How do you think it can be different? Anyone? How do you think it is? It can be different. How entity measures, financial performance. Any idea? Okay. Cash basis or accrual basis. Good, Mohammed. Depends upon the nature and size of entity. Good, Tanisha. Depends upon legal structure. Yes. Budgeting and forecasting. Good, Amit. Yes, Geeta. Let me show you some information on that. When I say, measuring the financial information and, financial performance, let me show you one example. So this is a KPI data book. KPI means key performance indicators for a particular company, and this is the publicly available data. That is not something which is restricted or I'm showing you that I have the access. No, this is the publicly available data. Okay. Now, if I go to the quarterly data, see how the company is, tracking its performance with respect to the food delivery, with respect to the quick commerce, okay, total business, year on year change, then adjusted EBITDA, then a lot of things are there, a lot of metrics are there, different metrics, average order value, okay, average monthly transaction for the customers, okay, average GOV per day. GOV is nothing but over here. Uh, from here you are getting GOV. So everything it's there. Like what financial indicators. Now, for example, when I talk about average order value, will it be same? Do you think it is going to be same? Like it's not visible. Okay, sorry. Just let me. It's not visible. Just okay. Now I think it's visible. Visible now? Okay. So this is the Zomato's KPI data book, publicly available data. That is nothing only restricted to me. So when I talk about financial metrics or key, I was talking about measurement and review of financial performance. So how this entity measures its performance year on year or quarter on quarter. They calculate GOV revenue. They calculate let's say for example food delivery. So what is the GOV, adjusted revenue, contribution, EBITDA. Okay. Same way they have GOV calculated for B2C business at the company level, like food delivery, quick commerce, and everything. Okay. Then you have kind of uh, average order value that they have calculated. What is the average order value? Average monthly transactions of the customer. This is how the company is, calculating its performance or analyzing, measuring their performance. Like what is the food delivery, what is pure business, hyper pure, quick commerce, etc. Then you have some reconciliations to measure, and so this is something how the entity is measuring and reviewing the financial performance. Now, I'm definitely sure if I have this one, like average order value in this particular entity, I'm not going to find the same in the entity which is not into food delivery. Rather, for let's say, for example, uh, steel manufacturing industry, they will not be, calculating average order value. No, that will not be useful for them. So, entity to entity, these indicators change. Entity, look, people used to see, okay, people used to say they measure only on, net profit, EBITDA, that's it. No, that is the old way of measuring the performance. That is gone, long gone. Now there are lot many ratios, lot many analysis, and this is again this particular data. If you get this data, you can easily identify, you can easily understand and perform some analytical procedures. Hypothetical example, if I give you today, okay, you can see like for quarter 2, 3, 4 of FY22, the GOV is increasing. Quarter 1, 2, 3, 4 of FY23, again, I have a good GOV increase. Means I can say the GOV is increasing constantly. I can say adjusted is EBITDA is improving. And by the end of quarter 2 of FY24, I could have a positive EBITDA. And these are the forecasts. So as of now, if I say I'm on quarter 3 of FY23, this will be kind of, what do you say, uh, forecasted one. So if you see over here, it is written uh, from quarter 2 FY24 onwards, we have started to report going on as a separate business segment whatsoever, and the numbers are onwards like this way. So, you will be seeing, from where the numbers are coming. So this is how, if you have this particular data, then you can understand, okay, fine, this is very important for me now. This will provide me a good understanding. Okay, let's say for example, this one, if I say the continuous average monthly active delivery partners are increasing. Somewhere there was a dip over here, but after that there is a continuous increase, but again the dip, again a dip, but again there is an increase. So I can directly correlate this with the commission I pay to delivery partner expenditure. So I can bring this number in front of the commission paid to delivery partner, and I can, see whether the commission paid is in line with the average monthly active delivery partners. I can perform some analytical procedures. Okay. I can understand by this way, I can understand the entity, its financial performance, and on the basis of that, I can, identify, okay, where is the problem, where is not, where is the risk, and what additional can be understood or what additional data I need. Even you have financial year wise, FY wise data. So you can see the whole trend of the company from where to where the company is going on. Okay. So this is publicly available data. And as I said, how the entity measures and reviews the financial performance is a very important part from where you can get a lot of information and you can perform a detailed risk assessment. Clear till now? Any doubt? Any doubt? This what we understood is how to understand the entity. And when I said how to understand, what to understand within the entity, how we understood, like, okay, inquiries, analytical procedures, observer inspection, and these 2 points, other information. That is how we can understand the entity. But what to understand is something is this. And that is, I'm talking about before coming to this part. Like once I have the understanding, then I can start preparing the Excel. I can start from this particular point. But how to reach till this point, I'm telling you that. Again, guys, any doubt, any questions? If you have questions, then ask freely. Trust me, the more you will ask, the more clarity you can get, guys. Any doubt, any questions? No, no questions. Okay, fine. If no questions are there, then let's proceed further for the discussion. Now, this was the part where I told you, how to understand the entity and what to understand in the entity. The next part is to understand the entity's internal control. Okay, how to understand the entity's internal control and what to understand in that. That is something we need to learn. Okay. So when I talk about, let's say, for example, internal control, okay, how will you understand the entity's internal control? Like, before we deep dive into the discussions, you tell me how will you understand the entity's internal control? What you will do? How will you understand the entity's internal control? Come on, guys. How you will understand the entity's internal control? We discuss with the management. Very good. Amit, discussion with the personnel, walkthrough of the process, sample and dummy data test. Good, Tanisha. Very good. Very good. Okay. Now, to understand which internal controls I need to, like, basically understand, what I need to do is I need to first understand, like, whether I need to obtain understanding of all the internal controls or only internal controls relating to the financial reporting? That is something I need to understand first. Okay. So the second part is understanding the entity's internal control. Now, when I say understanding the entity's internal control, auditors is required to obtain understanding of internal control relevant to the audit. Okay. But but there could be some controls that might not be relevant or related to the financial reporting. Okay. So a control, can be related to the financial reporting, cannot be related to the financial reporting, but it can be relevant to audit. Two things. Control relevant to the audit is not equal to internal controls related to financial reporting. Are you getting this point? That controls which could be relevant to audit are not only the controls which are related to the financial reporting. Can anyone give me an example of a control which is not a financial reporting control, but it could be relevant from the audit's point of view? Control not relevant, not related to financial reporting, but relevant from the audit's point of view. Anyone? If I see an example of a control relevant to audit which is not a financial control or control not related to financial reporting. See, in as per section 143 3I of the Companies Act, okay, statutory auditors is required to report whether the company has an adequate internal financial control with reference to financial statement. Okay, so that is coming from controls related to financial reporting. That is internal financial control with reference to financial reporting. Okay, that is coming from section 143 3I. Okay, now let's say for example, if IFC is applicable, okay, if IFC is applicable, then am I only required to review the controls which are related to the financial reporting? If IFC is applicable, then am I only required to review the controls which are related to financial reporting, or I can leave the controls relevant to the audit? So very good example of control which could be non-financial but relevant to the audit is production related, like to identify material overconsumption. Okay. Now, when I have to report on IFC, do you think that I need to, ignore controls which are not financial reporting related? Very good, Tanisha. No, Amit. Actually, the thing is, I cannot only, even though when I'm reporting on the IFC, internal financial controls, or controls which are on the financial reporting side, but when I'm performing an audit, okay, when I am performing an audit, I am not required, or I have not, I should not restrict myself to the controls only relevant to the financial reporting. No, I need to see all the controls which are relevant to the audit. Remember, for audit, you need to see controls which are relevant to the audit. I can give you an example. There could be a financial control, okay, control related to financial reporting, but it will not be relevant to the audit. So not all the controls, not all the financial reporting controls also are, relevant to the audit. So this is something we need to understand with respect to the controls. And that is a, people or students a lot of time, create a confusion, or, they get confused between controls relevant to the audit and financial reporting controls over financial reporting are same. No, they are not. So it could be a scenario that some controls which are relevant to audit could be, okay, could be controls other than controls on financial reporting part, or other way around. It could be that some controls on financial reporting might not be relevant to audit. Both of the examples can be possible. Both of the examples can be possible. Let's say, for example, controls with respect to onboarding of employees. Okay, termination of employees, ITGC controls, or kind of, system controls with respect to system modification, change log over the system, program. So there could be controls which could be relevant to the audit but not be financial reporting related. Or on the other side, there could be, financial reporting control but might not be related or relevant to the audit. Okay, SOD is one of the good example, which you can say it's not a financial reporting control, but it is relevant for the audit. SOD, I mean segregation of duties. Yes, absolutely good, Jobin. Very good. Yes. So segregation of duties is one such example. So first of all, I need to understand that I need understanding of controls which are relevant to audit, not the controls which are relevant, related to the financial reporting. There is a difference in both. Okay. Although we report on when we are reporting under the Companies Act under Section 143(3)(I), we are reporting on internal financial control with reference to financial reporting. Yes, we are reporting related to that particular restricted portion. But when we are doing audit, we have to see a larger scope of the controls. Okay. I will come to that, Tanisha. Don't worry. So I will explain in some time the types of control when I talk about, ITGC control, uh, then other types of control. Okay. Now the question comes is, okay, and we understood that we need to understand the controls which are relevant to the audit, but how? How we need to understand? How we need to identify that? Okay, how we can, understand what are those controls? From where we can get an understanding of the control which are relevant to the audit? That is a very big question. Okay, so how you can get understanding of the controls which are relevant to the audit. Can we just go and check, okay, ask management, perform inquiries? Okay, you management, please tell me what are the controls which are relevant to the audit. In processes, we can do that. For the risk assessment, we can do that. But for the control, can we do that? I will tell you answer is no. The reason because for the control you cannot do that because controls which are relevant to the audit are the ones you identify that are relevant. Okay. The controls which are relevant to audit are the ones that you identify that, okay, these are the controls which are relevant to the audit. And for that, you need to have an understanding the whole control environment. So in order to have an understanding of the internal controls, I need to have an understanding of the whole control environment. To understand the internal controls within entity, we need to understand whole control environment. Okay. Now, the way we were understanding, let's say, for example, I was saying what to understand, what I need to understand for the entity. If I want to understand the entity and its environment, we had a list of items like I need to understand relevant industry, relevant regulatory area, applicable financial reporting framework, its operations, different things. What when I say what I need to understand with respect to the entity and its environment. So when I say entity and its environment, so I have a list of items. Same way when I say control environment, then the question comes is what I need to understand in control environment. The way I had a factors for entity and its environment, same way I will be having some factors for control and its environment, internal controls and its environment, and usually we call it control environment, internal control environment. Okay. So what are those factors? Okay. If I want to understand the internal controls, how I can understand that? What are the factors? Okay. So instead of, having this word over here, I will keep the word internal control to avoid confusion. In order to understand the internal control, there are certain factors that we need to understand. And we call these factors as components of internal control. In order to understand the internal controls, we need to understand its components. Who can tell me which are the components of internal controls? Components of internal control. If you want to understand the internal controls within the entity, you need to understand its components. And if to understand the components, which are the components that are there? Come on, guys. Good, Kanisha, very good. Come on, guys. How can you understand, which are the components of internal control? If you want to understand the internal, which are those components? So if someone can provide an example or some answers that. Come on, guys, quickly. Very good, Yodugunalu. Very good, Geeta. Good, Yukta. Good, Geeta. Very good. Good, Tanisha. Very good. Okay, yes. So the components which are there. Okay. Now you can say kind of, I'm not sure how many of you are familiar with COSO framework. Okay. Now, COSO framework is something again, is one of an example where you can understand the control. Or like this particular, example, COSO framework example. COSO framework is used to establish the internal controls. Now, if that framework is used to establish the internal control, you can use the same framework to understand the internal controls. Are you getting my point? So if I say that that framework is there to establish the controls within the entity. If I want to establish the control within the entity, there is a framework that if I use that framework, I can easily and efficiently establish the controls within the entity. Okay. Can I use that framework to understand also? Answer is yes. Answer is yes. I can use that framework to understand the internal controls also, because that is the framework that is used to establish the internal controls. I will be using the same way framework to use the internal control. Understanding? I will use the same framework to understand the internal controls. So when I say COSO framework, so you see this particular part over here. This is nothing but components of internal control. This is nothing but the components of internal controls. Okay, that is a one dimension. So usually we call it COSO as a three-dimensional tool, because on one dimension it provides you the components of internal control. On the other dimension, it provides you the level on which it is implemented, how deep these controls are implemented. Like the first level, the top level is the entity level. Then you come the division, you come the operating, you come the functions. So how deep it is. Okay, the second dimension of the COSO framework. The third dimension is how horizontally it is expanded. It is expanded to operations. It is expanded to reporting. It is expanded to the compliance. So how it is, good expanded throughout the entity. Is it expanded only, or is it is implemented only to the operations, but into the deep, or whether it is operated, expanded throughout the entity, including operations, reporting, compliance, and it is deep too. Okay. So kind of we have given a three-dimensional tool, but as of now, we are only referring to the internal components of internal control. In order to understand the internal controls within the entity, you need to understand the components. That is for sure. Without which you cannot understand the internal controls. Now, why so? Okay. Why I need to understand the components to understand the internal controls? To say that, like, okay, if it is written somewhere, from where it is coming, that okay, this is the thing I need to do. The logic behind is, or you can say the concept behind of understanding the internal control is, internal controls are not like the entity or its process that you go do an interview, and it's done. As I said, there could be multiple type of internal controls. Internal controls operating at the entity level, at the division level, at the functions level, and internal control relating to the operations, relating to the financial reporting, relating to the compliance. So there are multiple, types of internal controls. They are operating at multiple levels. Some internal controls are operating at the entity level at a whole. Some are operating at a function level. Some are operating at, a particular, for example, I'll go back to my example of Excel. This internal control that each invoice is prepared by the accountant, is reviewed and approved by the manager. This is an example of the control, internal control, which is at the function level, impacting only one operation. Okay. So if I go that it is a operating at the function level, impacting only one operation. So somewhere here, this part, it can be that much small part of the overall control environment. Now, if I need to understand the overall control environment, overall internal controls, I need to understand different sides of the controls which are related to, as I said, related to the integrity and ethical values within the organization. Okay. A lot of things I need to understand within the organization. And when I say I need to understand the internal controls, I need to understand how effective they are, how efficient they are. So that I can do these things. Design effectiveness on operating testing. In order to rely upon the control, I need to understand how efficient they are. See, the purpose of understanding the control is to rely upon the control. And I can only rely upon the control when I can understand what is going on with respect to the controls and the entity throughout. Okay. So when I say control, okay, let's understand these different components of internal control and have further understanding of it. When I say control environment on the top, the first component. Now you will say how control environment is a component. Like if control environment is something we need to understand. No. That's why I change the words over there to avoid the confusion. So when I say control environment, okay, it's kind of the you can say practice policies that the management is following. Okay, to encourage people to recognize the controls. Okay, to recognize, to understand, to kind of give a sense that internal controls are important. So the importance that is required to be given to the internal control, that is the overall control environment I'm talking about. Kind of communication and enforcement of integrity and ethical values. Okay, kind of promoting competency within the organization. Participation by those charged with governance monitoring. Okay, and spreading the importance of the responsibility that the each people have. And also participation by those charged with governance with respect to understanding their own responsibility. Okay, management philosophy and operating style, something how management is following the controls, kind of tone at the top. Okay, organizational structure, assignment of authority, responsibility, human resource policies, all these together make a control environment, the first component of internal control. For an example, let's go to this control. Now, each entry prepared by accountant is reviewed and approved by the manager. That is for sure. That is a control I know. Okay, this is the control. But how control environment can impact this, I'll tell you. Number one, at times there are certain things which are silent within this. Number one is how, when I say reviewed by the manager, how manager is reviewing, how seriously manager is reviewing. Okay, for the sake of review, manager can sign okay, review, that is done. But how seriously the manager is reviewing, that is important. I can say all the invoices are reviewed by manager. I have a good internal controls. But when it comes to the qualitative part, that how good is the review done by a manager? Okay. Now, second thing is who's manager? Manager of that accountant, someone else manager, which manager we are talking about. When he is reviewing, let's say for example, throughout the year, okay, the accountant is preparing the invoices. Then at the end of quarter, manager reviews everything together. Good. Done everything. Closed. No. So how those things are performed, that is something coming from control environment. For example, is manager capable or competent enough to review these invoices? Is accountant competent enough to prepare these invoices? Then only I can say, okay, this internal control is appropriate. Only just by following an activity that I have a maker checker, I cannot say the control is appropriate. This is one part of the control that you are seeing on the face. That is known as a control activity. This is one of the part, control activities, segregation of duties, maker, checker, whatever you see, that's one part. That's a control activity. But when I say how that control activity is performed, it's something dependent upon the control environment, okay, and other components of internal control. Okay. So that is, I'm talking about tone at the top, control environment. How management makes it, that everyone should take control serious. Second is the risk assessment procedure. So this Excel sheet is prepared by us as an auditor. Remember in the last lecture also I said that how management performs this, how management identifies this particular risk and everything, and that risk assessment procedure is part of control environment. If management is able to identify appropriate risk, then only they will able to map the control in front of them. So if management knows that there is a risk, then only they will place a control. Otherwise, they will not be able to place a control. And then I can say, okay, their control environment is not efficient at all. So how management is performing risk assessment is a one important part to understand the overall internal controls. Control activities, the third part. When I say control activities, this includes, performance reviews, like reviews done by the management. When I say performance reviews, kind of entity level control, that, financial results are reviewed at the entity level, division level. So performance reviews. Then I could say information processing controls. So now, when I say information processing controls, okay, it could be ITGC. When I say ITGC, it is Information Technology General Controls. ITGC. Okay. Now, what are these ITGCs? ITGC is something, these are the controls which are there around the system. Okay, they are general controls around the system so that the application can work appropriately. For example, restriction in respect to access to the change of program. So let's say, for example, there is an application. Okay. Now there is some setting in the application with respect to the functional currency, year start, year end date, some small basic settings which could impact your some big calculations. For example, if I change functional currency from INR to USD, then all the transactions in INR by automatically revalued by the ERP system into USD. So it will have a huge impact. But just changing one small setting, I can create a havoc in the systems. Now, how to ensure that people should not have unauthorized access to these settings, which are necessary for the system to work appropriately. So for that, there should be there are some checks that okay, only authorized people can have access. Only authorized people can make changes to the program. Restricted access. And when I say these accesses and controls, that is nothing but IT general controls. So these are the general controls for the small settings, for the general controls around the applications, which help the application to run efficiently, effectively, and for the purpose it is. Okay, so that is IT general controls. And then you have a application control. Application control, for example, if I give you best example is, in each entry you have a debit and credit side. Can you pass an entry with single only debit? I don't want credit side in the journal entry. Answer is no. Definitely no. We have a double entry system. Now that double entry system, like I know we in accounting we have a double entry system. How will the ERP know that? How the computer knows that accounting is based on double entry system? So there is a check, there is an application control within that ERP that please do not accept only debit side of the end. If someone tries to do that, reject it. Or for example, if someone tries to post an entry into a future date or into a previous year, then don't allow. So these are general application controls or check application checks which are placed into the ERP application itself. Physical controls, physical security of the asset, authorization, access, all these are types of physical controls, again part of control activities. Again, physical controls, IT general controls, application controls may not be related to the financial reporting process, but might be relevant to the op. Segregation of duties, as I told you, maker checker, something like that. So segregation of duties is another part of control activities, another type of controls which could be there. And we were saying, like invoice prepared by the accountant is reviewed by the manager. That's the segregation of duty. Okay. That preparer and reviewer are two different people. Then the next part in the control environment is the IT and communication, information and communication. Physical, hardware, which ERP software you are using, what is the information technology you are using within the entity. Second, then the communication, how the communication flows. Okay. And the last and the base layer of understanding the internal control is monitoring. Means who is monitoring the control and everything, what is there on the top, the four elements. Like within the entity, who is monitoring control environment, risk assessment, control activities, information and communication at all the level, entity, division, operation unit or functional level, or across all the areas like operations, reporting, compliance. Who is monitoring that? How monitoring is done? What you do after monitoring? So if there is a a system of monitoring the internal controls or other components of internal control, okay, then that is very important and that gives you a sense of comfort. Okay, now there is monitoring also. So from time to time, the other components are monitored by the entity and they, make changes based on the requirement. So internal check system could be there, where the internal check of the internal controls is done. Kind of internal audit. Internal audit is another part of monitoring activities. Okay, one of the part of monitoring activities is internal audit. Internal audit function within the organization monitors, the internal controls independently. So this is how the whole control environment is structured. And in order to understand the internal controls, we need to understand all the components. Now you will say, what is the difference between component 1 and component 5? Okay. So component 1 is the tone by the management, that how important the internal controls are. Component 5 is something checking the tone. Like for example, okay, I said one of the component is that tone of the management, tone at the top. But who is checking whether they have appropriate tone or not? Who is checking that whether the tone is there throughout the year or at the end of the year? So monitoring activities does that. That they check whether the tone was consistent throughout the year or it was only during the end of the year or during when there was some issues identified. So that is the basic difference between component 5 and component 1. Any doubt with respect to this? Any doubt, guys? Any doubt? Any doubt? See, what we started with identifying, assessing the risk of material misstatement through understanding the entity and its environment, including internal controls. Okay. So we completed this part of our essay, understanding the entity, its environment, including internal controls. That how to understand the entity, how to understand the internal controls. Now this next part is this one. Identifying and assessing the risk of material misstatement. So once you understand the entity and once you understand the internal controls, now the next steps comes to identify and assessing the risk of material misstatement. Okay. If no further doubts, then what I propose is let's take a quick 10-minute break and then we will go to that particular topic. Clear? Okay, let's take a quick 10-minute break. continue the session. Okay. So what we were discussing the components of internal controls. Okay. We were discussing in detail what are the components over there to understand the internal controls itself. And for that, understanding its component is necessary. Now, once you understand the internal controls, once you understand the entity, you need to understand and you need to perform the risk assessment procedure. So the next part is that standard says that please perform, identify and assess the risk of material misstatement. So identify and assess the risk of material misstatement. And okay, I agree to this, and I will perform that, but how? That is I need to understand. But before I go to that how I need to perform the risk, assess the risk of material misstatement. Standard says that you need to assess, identify and identify and assess at two levels. One, financial statement level. Second, assertion level. Okay, good. Financial statement level, assertion level. Okay. Now, how to, then the thing is how we need to perform or we need to identify and assess the risk of material misstatement. If I ask how to do that, how to identify and assess, for that, I need to first understand and obtain an understanding of the entity and its controls, internal controls that I did. So first part is to obtain understanding, and we understood how to obtain understanding. So in order to identify and assess, understand the entity and its environment, including internal controls that we already did. Fine, good. Okay. Then what it says that understand whether any identified risk and evaluate whether they are more related to the financial statement or any assertion. So understand whether the risk identified are okay more pervasively to the financial statement as a whole or are more related to financial statement as a whole or are related to any specific assertion. Okay, fine. We'll do that. We'll understand whether the risk is related to the financial statement or whether it is related to specific assertion. Then it is saying identify what could go wrong at assertion level. What could go wrong at assertion level? Something similar we heard in the last lecture. Correct? Something we did similar in the last lecture. Identify risk and identify what could go wrong at the assertion level. Wait a minute. We have already did this. What we did is we identified what could go wrong at the assertion level in the last lecture itself. Remember this Excel standard is saying that you identify what could go wrong at the assertion level. We did that. Then what standard says? Consider the likelihood of misstatement including possibility of multiple misstatement okay, including possibility of multiple misstatements. Again, I think we already did this in last lecture. We went and we understood what is the likelihood, probability of occurrence, and how we did. We did by understanding, okay, there could be 5% chance, multiple misstatement, not once, but multiple times. We understood, okay, there could be multiple misstatement. Out of total 100, there could be 5 invoices where we can identify misstatement, multiple misstatement. Remember? Now that's 5 can be, the total value and everything. We understood that, okay, what is with respect to the 5? Like, 5 invoices could be, inaccurately processed, multiple misstatement and likelihood. What is the chance of occurring? So we understood this in the last section. Okay, we have already did that. Then what standard says that is understand whether the potential misstatement is of a magnitude that could result in material misstatement. Again, I think we have performed this activity. Remember when I was referring the magnitude, we discussed, okay, based on the materiality, we will decide whether the potential impact, the magnitude, whether it is showing me low, medium, high. And if it is beyond my performance materiality, is beyond, the starting limit, yes, that's a material misstatement for me. Remember something from the last lecture, that we understood the magnitude based on the materiality. Like magnitude is of that nature that it could result in material misstatement. So we took up the misstatement, we compared it with the materiality, and we understood whether it is high magnitude, low magnitude, or medium magnitude. We compared with the materiality so that we can understand whether the misstatement is material or not. So we actually performed this in the last lecture, and that I was just talking about. This the one we understood the starting point in the last lecture, and today we understood before reaching to this position, before reaching over here, what we are required to. Now, there is something more that I want to discuss, which I did not discuss in the last lecture, or you can say, as a part, additional part. Okay. Now, when I'm doing risk assessment, I need to pay focus more to some different kind of risk. Okay, different kind of areas. And that is I kept a place open over here. Remember when I was talking about these risks, I said, there could be multiple types of risk. Okay, now there could be fraud risk related to significant economic and other accounting development like regulatory environment, complexity of the transactions, whether it is related party risk relating to subjectivity in measurement of financial information, risk involving significant transactions outside the normal course of business. Okay. When these kind of risks are present, auditor is required to pay special attention to these kind of special risks. So we are talking about special kind of risk, okay, where a bit of more you can say focus is required to be given. Not the normal one, but special kind of risk where a more focus is required to be given. Okay, so these risks are risks where they are over and above. They are like your normal risk or what could go wrong, but they are of such nature that it requires more focus than compared to other risks. For example, fraud risk. Remember, we something we discussed when we were discussing about auditor's responsibility with related to the fraud in a financial statement. So in that way, these risks are special kind. So I can say special risk requires special attention. One, risk of fraud is a special risk. Second, risk is related to recent significant economic, accounting, other development like changes in regulatory environment. Risk of complexity of transactions. Risk involving significant transaction with related parties. Degree of subjectivity in measurement of financial information, measurement of uncertainty, like estimation. Risk involving significant transaction outside the normal course of business. So these are some specific risks which requires specific consideration from the side of auditor. Clear? Any doubt till now? Any doubt with respect to understanding and identifying and assessing the risk of material misstatement through understanding the entity and its environment, including internal controls? Clear? Any doubt? Any doubt, guys? Okay. Now let's proceed further. I want to take up the next part, that is part three. Remember, I was talking about in the previous lecture with respect to this particular testing. Okay. Now, let's understand. Till here, we were clear. Okay, we identified the assertions, we identified the control. Now comes the design effectiveness and operating effectiveness of the control. Okay, in order to rely upon the control, I need to understand the control, whether the control is operating effectively throughout the period or not. The part three. Okay. So how will you understand the design effectiveness? How will you understand the design effectiveness of a control? How do you identify a design effectiveness, guys? So in order to identify, let's say for example, you want to identify whether the control is designed effectively, how will you do that? Anyone? How will you do that? How will you identify that? How will you identify whether the design is effective or design is appropriate and why I need to do that? Come on, guys. Good, Charu. Very good. If I want to understand the design effectiveness of a particular control, how will I do that? Okay, leave it that. What is design effectiveness testing? DE testing, we call it design effectiveness testing. So, what is design effectiveness testing I'm talking about? What do you do in design effectiveness? Okay, you mean by design effectiveness testing? What do you check in there? Come on, guys. What do you check in design effectiveness testing? No one? Okay. In design effectiveness testing, what I do is I understand, okay, it is an understanding kind of whether the control is designed in such a way that it is addressing or mitigating the relevant risk. Understanding that whether the control is designed in such a way that it is addressing or mitigating the relevant risk. Okay, if I can get that understanding, means I am doing design effectiveness testing. I am understanding whether this control, okay, this particular control is mitigating this risk or not. Let's say, for example, the risk was inaccurate entry of PO invoices. Now, let's take me another example. Let's say, for example, done with the purchases. Instead, I will be taking estimates. Okay, year-end estimates. So there was one process, okay, that warranty estimate or bad debt provision. Simple one. So the process is at every month or quarter end, accounting person obtains obtains account receivable data and aging from AR team, that is account receivable team, and calculates the bad debt provision required for the quarter. So this is the process basically. Okay. Now, if this is the process, then sorry, yeah. If this is a process, then I can say there could be multiple type of what could go wrong or risk here. Number one, that incorrect calculation of bad debt provision. Okay. Next, what could be the risk is inaccurate uh, accounts receivable aging. Okay, I'm getting inaccurate account receivable aging, so that uh, kind of will create an issue for me, or incomplete or inconsistent uh, accounts receivable data. So the data is incomplete for me to perform the bad debt provision calculation. So this is kind of risk I can understand. Okay, here with respect to estimates, one estimate is bad debt provision. Okay, fine. And fine. Now, when I say inaccurate calculation of bad debt provision, okay, what is the risk I'm seeing here with respect to the assertions? At what assertions I'm seeing a risk? I could say assertion is if I calculate if I calculate bad debt provision inaccurately, then it will impact accuracy and valuation, because provision is something will impact your balance sheet also. So you have a problem with the valuation. Then you will have a problem with the existence of that actual provision, kind of. Okay. If the inaccurate account receivable aging is there, again, I will have a problem with valuation. If incomplete and inconsistent data is there, then I could have a problem with completeness. Okay. And again, problem with accuracy or valuation. So this can be the scenario. Okay. Now, if this is a case, then I will again understand what is the probability in incorrect calculation. Let's say in past this has happened multiple times. Calculation is incorrect. Or I could say in past it has happened, multiple times the data is inconsistent. I'll say medium. Inaccurate aging, I'd say low. Reason because it's system driven. So the aging is system driven. That's why I say aging can very less chance of aging being wrong. So accounts receivable aging is system driven or system calculated. Fine. Then as a magnitude, if a provision goes wrong, then it will have a high impact. Okay. If there is an account receivable aging wrong, then it will have a impact and high impact. So then I will go and I will check what is the risk, overall inherent risk. Medium, high, I will place high, low, I will place medium. And here again high. Fine. So in front of that, I had one control. Only one control. And I'll tell you which control it is. So there was one control which was preventive control. Okay. It is a manual control and it is based on, it is quarterly. Bad debt provision calculated by accountant is compared with previous quarters calculation is compared with the previous quarter's calculation before entering into ERP. So bad debt provision calculated by accountant is compared with the previous quarter's calculation, and that is to by accountant only. By accountant before entering into ERP. Okay, this is the control. Now I say this control is giving me comfort on, let's say, kind of completeness and accuracy. Okay, I say this control is giving me comfort on completeness on accuracy. So the next question here is, do you think this control is sufficiently able to stop these risks? Do you think this control over here is appropriate and is able to stop or mitigate these kind of risks? Do you think the control is designed appropriately so that it can stop the risks which are present over here? This portion. So the risk over here and the control over here. Do you think that control is sufficient enough to stop the risk? Logically, I'm asking. Again, the control is that the calculation of bad debt provision is reviewed and is compared with the previous year quarter's calculation by the account. Now, the risks are there could be incorrect calculation, it could be incorrect account receivable aging, and I could have an incorrect data. So, do you think the control which is there is sufficient enough to stop the risks which are there for accounting estimate? Very good, Mohammed. Very good, Charu. Come on, guys. Waiting for your answer. What do you think? Yes, no. Any specific reason you guys think for yes and no? If you can provide the reason also, then it will be good with your answer. Correct. Correct, Yidu Kondalu. Very good. So I'll tell you one problem with this control. What if the previous year quarter's calculation was also wrong? You are comparing wrong with wrong and you are saying it is right. It will happen. Let's say, for example, previous year quarter's calculation was wrong. Now you prepared the calculation on the similar line, which is also wrong. But when you compare with the previous year quarter, you find, okay, this is in line with previous year quarter, means it is right. So when you are comparing wrong with wrong, you are thinking it is right. I don't think so that control is sufficient enough to mitigate the risk. If previous year quarter, if the data was incomplete, how the control will identify the data is incomplete this time also? The control is not designed effectively to mitigate these kind of risks. Rather, the control should have been like, bad debt provision calculated by accountant is reviewed by manager, okay, before entering into ERP. If that is a control, then I can say, okay, the review is being done. And in review, what he is doing is like he is comparing with the automated calculation, a lot of things he can do. But then I can see, okay, the control is designed effectively to mitigate the risk. So when I say control is designed effectively, I'll place, okay, this is designed effectively. Yes. Okay. Once I have a comfort, the design is effective, then I need to, test whether the control which is designed effectively, whether it is operating effectively. Okay. If I say design effectiveness is there, yes, if it is good, design effectively, then I will test operating effectiveness. How will you test operating of the control? How do you test operating of the controls? If you want to test operating effectiveness, how will you do that? Come on, guys. How will you perform the operating effectiveness testing of a control? Come on. How will you perform operating effectiveness testing? Okay, tell me what you do in operating testing, operative effectiveness testing. What do you do in operating effectiveness testing, guys? Come on, quickly. No one? In operating effectiveness, I understand that whether the control is operating the way it is designed throughout the period. Understand what I'm doing? In operative effectiveness, I check whether the control is operating effectively. Means if the manager was supposed to review the invoices, whether he's reviewing all the invoices. Okay, the control is designed effectively. Okay, the manager has to review. But in actual, whether he is reviewing the invoices or not, that I need to check. Okay, I need to check that thing, that whether the invoices are being reviewed actually by manager or it's just on the paper. So for that, what I will do is, let's say for example, for testing operative effectiveness, I may pick up 25 samples and see whether in those samples, okay, whether the manager has reviewed the invoice or not. So by picking up 25 samples, what I will do is I will check whether the manager has reviewed the invoices appropriately. I will check whether the manager has reviewed the invoices appropriately. For that, what I will do is I'll pick up 25 samples. I will go through, okay, the documents. I will inspect the documents which were there, like of 25 samples. I will ask them the email correspondence. Give me email correspondence. Okay, how you have checked. I will go and perform the inquiry with the manager. Okay, how you reviewed the samples, how you reviewed the invoices before they were processed. Okay, I will do observation. Even, I may ask manager, okay, tell me, this is a live example. Okay, this invoice has came to you for, what do you say, for reviewing. Tell me how will you review? I want to see live. So I will observe how manager is reviewing the sample, or reviewing the invoice basically. Live example I will pick up. Okay, so I may perform inquiry, I may perform observation, inspection, okay, of that particular sample that I have picked up, and then I can, on the basis of that, I can say, okay, whether manager is reviewing or not. Let's say, for example, after testing 25 samples, I identified yes, manager is reviewing. Okay, everything is passing. Manager is reviewing appropriately. I'll say control is designed effective, perfectly. Then, on the basis of that, I will provide a control risk. That control is operating effectively, control is designed effectively, means the control risk is low. The control risk is low. In that case, I will say the control risk will become low. because the control is operating effectively and the control is designed effectively. If this both is good, I am good. My risk will be low. Okay. Let's say another thing. There was another control, bad debt provision. The manager was supposed to review quarterly. So what I did is I picked up, okay, out of 4 quarters, I picked up 2 quarter sample, quarter calculation, 2 quarters calculation to review whether manager has reviewed the calculation or to check whether the manager has reviewed the calculation. And what I identified that manager has not reviewed the calculation. So I say no, manager has not. So instead of yes, I say no. Manager has not reviewed the calculation. Okay. Manager has not reviewed the calculation. Then what is the implication for me? Okay. Now, if that is a scenario, if manager has not reviewed the calculation, then how will I say that, okay, manager, like if manager has not reviewed the calculation, then what will I do? In that case, I will show this as a failure. I will show this as a pass. Okay, means design effectiveness is there. Okay, but the control is not operating effectively. Okay, design effectiveness is there, but the control is not operating effectively. Means, sorry, it should not be here. It should be here. Okay, means I have a, I could say high or medium, but I will say high control risk. Instead of medium, I will place the control risk as a high one. Okay. Now, if I place this control risk high because manager did not review 2 samples, okay, manager did not review appropriately, then there is a high risk for me. Control risk is high that, the manager was not able to, the control is not able to mitigate the risk. Okay. Control is not operating effectively. And in that case, what will happen is I had a high control risk. I had a high overall inherent risk. Mean that my risk over here, that the overall risk of material misstatement will be high. Overall inherent risk was high. Control risk is high. Then it will become high. Here, overall inherent risk was medium. Control risk is high. Again, risk of material misstatement high. Same way for the third. So overall risk of material misstatement high. Now here in this case, let's say for example, again, control was operating effectively. I will say so design is good. Operating effectiveness is good. Okay. In that case, I may call it like, okay, for example, I may call it that control is good, operating effectively, design is effectively, then I have a low control risk. Now it was a high overall inherent risk, low control risk, it become medium. High overall inherent risk, low control risk, again medium. Now it was a medium inherent risk, low control risk, I could place low overall risk of material mistake. Okay. By comparing this, medium, low, I can make it low. risk of material misstatement. That is the secret. Okay. Now, once I have this particular mapping over here, okay, that what is the overall risk of material misstatement, then the next thing is I need to perform some audit procedures, okay, in order to gather more audit evidence. I cannot only rely upon the control testing, I need to perform some audit procedures. Let's say, for example, the risk is whether the invoices are inaccurately entered into the system, inaccurate entry of PO invoices. Okay, I'll hide this thing as of now. Hide it, the control part. I do not need the overall, things, but I need only the control one. So I have a control risk. I have an overall risk of material misstatement. Now I need to understand what audit procedures I need to perform. Okay. So let's say, for example, if you want to check whether the invoices are entered accurately into the system, what audit procedure you will perform? In order to check whether the invoices are entered accurately into the systems, what audit procedure you will perform? Come on, guys. In order to check whether the invoices are accurately entered into the ERP, what audit procedure you will perform? Come on, guys. Some example, some try. Now you want to check whether the invoice is entered accurately into the system or whether the invoice is inaccurately entered. How will you do the audit of that? I'm asking simply whether the invoice is entered accurately or not into the system. How will you audit that? How will you audit that? Account balances with that of total invoices. Okay, Mohammed. Good. What else? What else you will do? If I want to check whether the invoices are entered accurately into the ERP, how will I audit that? Simply, let's say, okay, let's simplify this more. You have a bunch of invoices. Now you want to check whether these invoices have been appropriately entered into the system. Or whatever entry is there into the system, whether they have the invoices of that that amount or that name or something like that. How will you check that? Good, Charu. Good, very good. Compare the invoice into the ERP plus sample basis reconciliation of vendor balance with purchase and payment. Cross check the invoice and system data. Very good, Yedukundanu. Yes. So what I can do is, okay, what I'll do is I'll pick up some samples. Let's say hypothetical example, I'll pick up 250 samples of invoices and I will check whether the data in ERP system is same as in hard copy invoice. Okay, whatever data there is in ERP system is same as in hard copy invoice. By this way, I can get comfort over accuracy of the invoice that is there. Also, I can get a comfort over occurrence, means the transaction has actually occurred because I have a hard invoice. So I can get a comfort on that. Second, unauthorized entry of an invoice into the system. Now, if I want to understand whether the invoice was authorizedly entered or not, again, I will take, some samples. Let's say I'll take 50 samples, hypothetical example, and we'll check whether the invoices entered into the system are having appropriate authorization. Again, this will give me comfort on the occurrence because whether the accurate transaction, whether the transaction which has accurately, whether the actually has occurred that has been entered into the system or not. When I say I'm cross-checking the ERP data with the invoice data, what I'm doing is I'm inspecting. Inspecting the documents. Okay. Or I may also perform inquiry. Okay, tell me why this invoice is not there. When I'm comparing the physical documents, I may ask questions to the management or the person who is entering to the invoice. That okay, I have identified discrepancy. Why there is a discrepancy? So I may perform inquiry. I may inspect the documents. Even I may go and say, okay, let's recalculate whatever in case of calculation. Let's say this bad debt provision. What I can do is, if I have a risk of incorrect calculation, I may recalculate the bad debt provision for all the quarters. Okay, I may recalculate bad debt provision for all the quarters. So I may perform recalculation. Here, when I say sample 50 samples, check whether the invoice is there. I may inspect the invoice. So inspect whether the invoice entered into system are appropriately authorized. Same way, I may inspect and inquire. Inquire and inspect. Inquire and inspect whether the data into the ERP system is same as in hard copy invoice. Okay. So I may inquire, inspect, I may recalculate. Okay. So I will perform some activities so that I can, get some audit evidence. And when I will recalculate, I may get comfort on accuracy, completeness, okay, even classification and presentation disclosure because it will impact your presentation and disclosure. Plus inaccurate accounts receivable aging. I may recalculate aging. See, accounts receivable aging. Okay, inconsistent and incomplete data. I may reconcile the data, accounts receivable data with general ledger or trial balance ledger so that I can get a comfort that okay, this is complete data. I can do that. And if I recalculate the account receivable aging, I'll get comfort over accuracy. If I ensure reconciliation, if I perform a reconciliation, I will get complete, comfort on completeness. So I may do this. And after doing that, I need to think about the outcome. If I test 20 samples, it may come that, okay, 10 samples are inaccurately entered. Okay, 240 are good, 10 are not. 240 good, 10 failed. When I was checking 50, I identified 45 authorized and 5 unauthorized. Okay. Then, when I was checking the bad debt provision, I identified calculation is good. And when I was checking the aging, I said aging was also good. And when I was tying the general ledger, everything was good in this case. Now, if this is a scenario, okay, if this is a scenario, then what I need to do is if I identify 10 invoices which were failed, I need to understand the misstatement. Let's say the amount involved in those 10 invoices, okay, is of rupees 50,000. This is the amount of misstatement that I have identified. Okay. And let's say amount involved for the unauthorized invoice is, let's say, rupees 65,000 for those five invoices. So five invoices are actually fake invoices. They were not authorized. Someone entered fake invoices. Now, when I say fake invoice, this will trigger a red flag for me, kind of a fraud risk. If this is triggering a red flag for me, fraud risk, what you will do? Now, let's say, for example, you identified five invoices which are entered inaccurately, unauthorizedly. Means they were not supposed to be entered, but they are entered. They are fake invoices. What you will do now? Invoices of 65,000 are fake in your testing. Now, what you will do? Very good, Mohammed. Come on, guys. Invoices of 65,000, like five invoices have been identified are fake. What you will do next? Good, very good. You do Undalu. Good, Charu. Communicate with the management, discuss with the management. What else? So, can I say that I have not obtained sufficient and appropriate audit evidence? And I need to perform further audit procedures. Can I say that I have not obtained sufficient and appropriate audit evidence, or there's a requirement of revisiting the risk? Earlier, when I was checking the risk of unauthorized, I said low, low, low. Like it's a low likelihood and low magnitude. Am I required to revisit the risk over here? Answer is yes. This requires revisiting the risk. Means after performing the substantive testing, the third part I'm talking about here, part three, I am going again back to the part one, that is risk assessment. I am going back again to the risk assessment part because I identified something which has forced me to go and check whether the risk assessment I did in the start is accurate or not. I said the probability of occurrence is very low. I said the magnitude of impact is very low, but I have identified a fraud. How can I say the overall inherent risk is low? No, I need to change this. The moment I will change this to high, this will become high, and again my sample size will increase. My sample size will increase. I need to test additional samples, additional audit procedures, and then I need to say, and then I need to conclude whether I have obtained sufficient and appropriate audit evidence or not. So, whenever I perform a risk assessment, okay, whenever I perform the risk assessment, I need to revisit the risk. there's a need to revisit the risk assessment. And that is again the requirement of SA 315, revisiting the risk, okay, revision of the risk assessment. So SA 315 says that the auditor's assessment of the risk of material misstatement at the assertion level may change during the course of audit. So your risk assessment may change during the course of audit. During the course of audit. Okay. As in additional audit evidence is obtained. Means when you obtain some audit evidence. Okay. In that circumstances where the risk has changed or risk assessment has changed. Okay. The auditor is required to obtain audit evidence from performing further audit procedure. That is, the auditor is required to perform further audit procedures. Okay. Further audit procedures to obtain additional audit evidence. Or what can be done is, if new information is obtained, okay, either which is inconsistent with the audit evidence or which originally auditor thought was not present, then auditor is required to revise the assessment and modify the further planned audit procedures. For example, in this scenario, I have identified fake invoices, I have identified fraud. Now I need to consider if this is a fraud with respect to the unauthorized entry of invoice. I need to go and perform additional audit procedure with respect to the vendor reconciliations. I may also check whether there are other vendors also for which there is a fraud invoices. I may go and perform the scrutiny of that particular vendor for which the fraud invoices are there. So auditor needs to then revise the assessment or risk assessment and needs to modify the further planned audit procedures. And that's why we say that risk assessment is a continuous process. So this gives me that risk assessment is a continuous process. Okay. Because throughout the audit, I revisit the risk. Based on the evidence obtained, I revisit the risk. Understand? So are you getting my point? That's why I say the risk assessment is a continuous process. So throughout the audit, I need to go back again and again. I need to check whatever audit procedures or audit evidence I have obtained, whether that audit evidence is pointing me towards something that I need to revisit. Okay. Now the third part that I was discussing, that is, I am creating a response. I am creating a response to the assessed risk of material misstatement. That is something SA 330. SA 330 is nothing but the auditor's response to the assessed risk. That is the auditor's response to assessed risk. Now, when I say response, response is something that you already created. That okay, how you are going to respond the risk. Respond the risk means what audit procedures you are going to perform. This is the response that we have created in front of the risk of material misstatement that we identified. Okay. Now, what standard says? Okay. What is the requirement that is placed by the standard? Standard says this, that objective of the auditor is to obtain sufficient and appropriate audit evidence. Okay. To about the assessed risk of material misstatement. Okay. About the assessed risk of material misstatement through designing and implementing appropriate response to those risks. That is the overall objective that is there in the standard. The objective is to obtain sufficient and appropriate audit evidence about the assessed risk of material misstatement. This is the assessed risk of material misstatement. Over here, this I call it assessed risk of material misstatement. Okay. Now, what auditor needs to do is obtain sufficient and appropriate audit evidence. We did something audit procedure, and whether then we are identifying whether I have obtained sufficient and appropriate audit evidence by designing and implementing appropriate response to the risk. That is the appropriate response. I have designed the appropriate response to the in front of each and every risk. That is the standard requires us to do, and we are doing it. We have done it here. That we have designed and implemented appropriate response to the risk so that we can gather sufficient and appropriate audit evidence for the assessed risk of material misstatement. That's the standard required, and we did it. Are you understanding? That whatever it was required, we are doing in a practical way. Okay. Now the question comes is that, again, there are two things. One is overall response. When you will fill up everything over here, everything, you will say this is an overall response. When you will fill up everything, you will say this is an overall response. I'll remove this as of now for the sake, to have a clarity. So that we can discuss further. Just I'll remove as of now this one. Okay. So when I say overall response, when you fill up everything, when you fill up all the responses, you will prepare an overall response to the assessed risk of material misstatement at the financial statement. Okay. So objective is to obtain sufficient and appropriate audit evidence. Okay, by creating an overall response. That is there that we understood. Now, how we can do that? Okay. If my objective here is to obtain sufficient and appropriate audit evidence, okay, by designing and implementing appropriate response to those risks, then I need to understand how I need to design and implement. We have already done this, we have already designed, but let's understand in a way of standard, like how audit procedures responsive to the assessed risk of material misstatement at the assertion level can be designed. Designing and implementing audit procedures, okay, responsive to the assessed risk of material misstatement at assertion level. Although we have did this, we have this only at assertion level itself. We have created at the assertion level, but again, let's see. Okay. So now, in order to design and implement audit procedures, okay, which are responsive to the assessed risk of material misstatement at the assertion level, okay, auditor is required to consider few things. Or in designing the audit procedures, auditor is required to consider the reason for the assessment given. First of all, he needs to consider the reason for the assessment given to the risk of material misstatement. Given to the risk of material misstatement at assertion level. And how that can be understood, how that reason can be understood based on likelihood of material misstatement due to particular characteristics of the relevant transaction. Okay. And by taking account of, by considering the relevant controls. So by considering the relevant controls, okay, and how we will consider the relevant controls by determining whether they are operating effectively, okay, and how we need to consider controls is by determining whether they are operating effectively, okay, throughout the period or not. So that is the first thing you need to do. You need to consider the reason. And then what you need to do is, then you need to obtain more audit evidence. Obtain more audit evidence. Okay. Obtain more persuasive audit evidence. Okay. In line with assessed auditors, assessment of risk. Means that whatever risk we decided over here, like if we are saying the overall risk of material misstatement is medium, then we need to obtain appropriate audit evidence with respect to the risk. If it is medium, then I tested 250 samples. If it was low, I tested 50 samples. If it is high, I will calculate all the quarters. So my response, okay, my response to the risk of material misstatement is based on the risk level that I have decided. That is something standard is saying. Okay, standard is saying that only, that obtain more evidence in line with the auditor's assessment of risk. Means you need to obtain more persuasive audit evidence as the higher the auditor assessment of risk is. If you have a high risk, you need high evidence. If you have a low risk, you might need a lower level of evidence. And for that, you need to consider the reason for the assessment. Like we considered why it is a medium, why it is low over there. We are considering the reason. And then we are also understanding the operating effectiveness of the control over here. Then only we are considering the control risk. Are you getting my point? So this is what standard requires, and we are doing that. So first, I explain you in a practical way, and then we are looking from the standards way. Clear? Any doubt till now? Any doubt, guys? Any doubt? Yes. So, yes, Charu. When I say risk of material misstatement at the assertion level, I mean this particular risk that we identified. Okay, if there is a risk and if there's this risk is there, then at what assertion it is impacted. That is the risk of material misstatement at the assertion level. Like you identify the risk and then you identify at what assertion it is impacting. Are you getting the point? That is the risk of material misstatement at the assertion level. Any doubt, guys? Any doubt? Also, please provide your feedback. That is very necessary for me to understand whether you are, understanding the topic or not. You need something else. You need an explanation in a different way. See, I'm here to provide you the best I can. But if you guys need something else, if you need explanation in some other way, then I'm happy to, provide you explanation in that way. For that, I need your feedback, guys. Are you liking the lectures? You are not liking the lectures. You need something else. You need more on the practical side. You are facing difficulty in this particular topic. You have doubts. So some kind of feedback, really will be helpful for me to understand whether you are thinking the speed is high, speed is low, something like that. Okay. So your feedback is valuable for me. So it will be better if you can, guys, can, share your feedback. That will be really helpful. Okay. And I am proposing to keep till here till today so that you guys can revise what we have discussed, can revisit that particular topic because we have discussed a lot today also. And on the basis of that, we will continue in the next lecture on the same topic. Okay. I need to complete the essay 330 and then we will see the practical questions that are asked in the exam. There is one doubt. Let me take it. Combined level of risk is related inversely with the detection risk. With example, okay, combined level of risk is related inversely with the detection risk. So, what is the detection risk? Detection risk is something you won't be able to detect. Okay, so you won't be able to detect the misstatement. That is a detection risk. Now, when I say combined risk, like if you can also tell me from where this you have picked up the line, I can explain you better. But what it appears is that, if your combined risk is higher, you need to keep your detection risk very low. Means if your risk is higher, if your risk, now if I say risk of material misstatement is higher, I need to keep audit risk at the acceptable low level. For that, I need to keep the detection risk at very low level and I need to test higher. Okay. the more the risk of material misstatement, the more the testing is required and the lesser will be the detection risk, because you are testing at a higher side. So there will be less chance of the detection. Okay. Less chance that you are missing out something. Detection risk is lower means you are missing out, less chance of missing out something. Are you getting my point? Higher the risk of material misstatement, higher the evidence I require, higher the testing I will perform, lower the detection risk will be there, and lower the audit risk will be there. Hope I'm clear to your doubt, Charu. Any other doubt, guys? Any other doubt? No? Okay. So if no further doubts, then guys, I propose to keep the session till here. Please, in the next lecture, before the next lecture, revise the overall topic that whatever we discussed. Read further from the study material. I want you guys to be ready with the reading of the study material. You should have read the study material before coming to the next lecture. Okay. And please provide your feedback so that I can understand whether you are liking the lectures or not. Okay, guys. Thank you. Thank you for your time. Happy Diwali, and I'll see you in the next lecture. Thank you. Yeah.